Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. In the week ahead, investors will be focusing on a speech by Federal Reserve Head Jerome Powell at the central bank's annual conference in Jackson Hole. For insight on the future path of interest rates, the speech could shake out markets with the rally in US. Equities already showing signs of slowing US economic data will be in the spotlight as fears over the prospect of recession linger. Meanwhile, PMI data out of the Eurozone and the UK is expected to point to further slowdowns in business activity. Here's what you need to know what to start your week. Investors will be eagerly awaiting Jay Powell's speech in Jackson Hole, Wyoming on Friday for possible answers about how high U.S. interest rates may go and how long they will need to stay at elevated levels to bring inflation back under control. The Fed has hiked interest rates by 225 basis points since March in a bid to battle inflation. Fed policymakers have reiterated that 3 is still a way to go in their inflation fight, pushing back on expectation of a peak and inflation and a so-called dovish pivot, one narrative that has helped both stocks. Last week, the Fed minutes showed that while the size of the September rate hike is still in play, policymakers felt there was little evidence so far that inflation pressures are subsiding. Powell is likely to remind investors that with one more inflation report and another employment report still to come before the September meeting, officials still have time to decide how large that rate hike should be. The economic calendar for the coming week features July figures on personal income and spending, which includes the Personal Consumption Expenditures Price Index, the Fed's preferred measure of inflation. In the 12 months of June, the PCI price index advanced 6.8%, the largest increase since January 1982. Other data points include figures on revised second quarter gross domestic product, which initially showed a contraction of 0.9%. There will also be reports on durable goods orders, initial jobs claims, and PMI data for July. Meanwhile, data on new home sales will shed more light on the cooling housing market. U.S. stocks have rallied since the start of the second half, boosted by stronger than expected corporate earnings and hopes the economy can avoid a recession, even as the Fed hikes rates to curb inflation. Markets have gained despite warnings from Fed policymakers that expectation of a peak in inflation and so-called dovish pivot from the central bank may be premature. But there are signs the rally may be starting to slow after Wall Street saw three major indices all indeed last week lower. The S&P 500 fell about 1.2% and the Nasdaq slid 2.6%, both snapping a 4-week streak against of gains. The Dow lost about 0.2% for the week. When market participants start to return from their holidays and look back, they will find central banks still far from having achieved their goals of reining in inflation. ING Red's strategy said in a note to clients. That means a continued tools between central bank tightening expectation and reducing fears. Okay, It's from me. Thank you for watching. Don't forget to like, share, comment, and subscribe. See you.